Personal financial planning is made to help individuals or family unit to plan their budgeting or saving in a certain period. So, for personal financial planning, it is required them to allocate income into different avenues in order for them to achieve their goal fulfillment. So, example of the common goal fulfillment is retirement, personal protections, or children educations. All the individuals or a family unit need to identify first of which risk is more close with them. Okay, for example, situation I give it. Mr. Abu is 24 years old man and he is a heavy smoker. So from this statement, what we can conclude is in 30 years from now, Mr. Abu may suffering a heart attack or a cancer. So if right now he plan their personal financial wisely and allocate some of their income into insurance, then it will help him in the future. How does personal financial planning helps to strategize the insurance planning? Okay, first of all, before we start buying an insurance, we need to understand first the coverage policy in detail. Okay, because every insurance company in Malaysia, they all have a different policy of coverage, and it can help people to save money which is in their personal financial. And second, we also need to survey various insurance, which is it can help individual to obtain discount or premium paid to insurer. And lastly, make a comparison for all insurance company based on the quotation they receive. Now, what is a relationship between insurance planning and personal financial planning? First, it is useful to help individuals to measure and discover their activity to prepare a budget for their insurance planning for their future. Second, manage personal financial may give a monthly safeguard to individuals. And lastly, it is useful to reduce the risk of debt after the individuals or family unit involved in uncertain events.
People are exposed to various types of risk and levels of risk while making financial decisions. Insurance protects the insured from financial uncertainty and unexpected losses, allowing them to plan for the future. Protecting income, property and possessions from financial loss from accidents, acts of nature, illness or injury and death are crucial. People can manage the risk of such losses by purchasing insurance. Natural disaster-related losses have risen significantly in recent years. Many risks, including flooding, can be covered through insurance. People invest a massive amount of money in their homes and vehicles, so protecting their property assets and savings against loss is a significant issue. People may wonder why they should apply for insurance. This insurance can protect their assets in the event of loss, such as an accident, theft, or fire. As a result, while the premium price for flood insurance is high, insurance is more than just preparing for the last worst-case circumstances. Insurance acts as a protection for a financial strategy by providing the appropriate insurance at the appropriate level to safeguard individuals from unanticipated occurrence. Medical insurance is crucial since it may be used as a financial precaution when a calamity happens and precaution against future risks. For example, the insured can maintain their cash flow because it does not affect their monthly expenses. They must pay insurance premiums monthly. Aside from that, the significance of medical insurance might be linked to lessening worry and panic. The insurer guarantees that the insured will not have to worry about the cost of getting treatment during an emergency. Fear and stress decrease once a loss happens since the insured know that they are covered by the insurance. A medical card will cover the healthcare services such as medical treatment. It can also safeguard the insured from high medical expenditures and provide complete coverage for medical, surgical, and hospital bills, ambulance. The importance of insurance is that medical insurance can provide tax relief. One of the most crucial components of financial planning is tax planning. People will look for new ways to minimize their annual tax liability every year. Purchasing medical insurance is an effective way to lower the tax burden. If the taxpayer, spouse, or children purchase medical insurance, they can claim a deduction of up to 3,000 ringgit Malaysia for the tax relief years of assessment 2021. Hence, it is critical to plan finance wisely, especially to get the maximum
Family flood relief and interest-free loans for micro, small and medium companies, informal entrepreneurs and rice farmer. It doesn't cover all losses and costs. Takaful flood insurance or cover exempt flood victim from reimbursement. Malaysians still undervalue takaful insurance and flood protection. After a trauma, most individuals value insurance. They forget about it and stop covering it when it expires. Prescription medication are affordable and accessible to millions thanks to most insurance plans. This is essential for chronic disease management. Many medicines are excessively pricey without health insurance. Health insurance connects people to regular sources of treatment and a network of providers that can provide complete, continuous, and coordinated healthcare in conjunction with patients.
I, Mama Amin, will explain about statistical information. First, you can see in the picture the basic budget percentage. Budgeting percentage more than simply adding up your expense and subtracting them from your income. Budgeting percentage for how much you will spend on various expenses is critical, especially if you have big money goal like paying off debt, building on emergency, saving funds, or saving for retirement. It all starts with knowing your income, how much you spend each month, and what step you need to take to reach your financial goal. How to setting budget percentage? When setting budget percentage, there are a few basic rules to remember, and the first question you may have is, how much should this cost? It is possible to overspend your budget, but there is no need to be concerned. If you discover that you are constantly overspending, make change to your budget to help prevent future overspending. Here's a quick rundown of how your earning could be divided. From the statistic, we can see the house 25 to 35%, takaful insurance including health, medical, hibah and life 10 to 20%, savings 10 to 15%, food and drinks 10 to 15%, transportation 10 to 15%, entertainment 5 to 10%, clothing to 5%, personnel 5 to 10%. These are the most fundamental areas that your budget is likely to cover, but there are maybe additional costs that you need to consider that will change the percentage that each of you allocate to each category. You might need to set aside money for things like charity donation, certain debt, payment for child or spousal, undercover medical, pet care, daycare, cellular activities, school supplies, travel costs, putting money aside for sporadic expense like yearly, annually, property tax or car insurance premium. Why do I buy an insurance? For your information, insurance is essential for allowing you to focus on the important things in life because it ensures financial security for you and your family in the event of unfortunate event when large financial burdens such as hospital bill or medical charge arise. Insurance assists in covering the cost, allowing you to pursue your dream. This is how it's done. First, health insurance pay your bills if you develop certain illness or injured or disabled. Second, income protection protect your salary by replacing it if you are unable to work. Third, life insurance provide financial support to your loved ones if you are unable to work. Having this type of insurance allows them to maintain a comfortable lifestyle with little worry. Fourth, education and retirement plans enable you to achieve your goals, whether it's overseas education for your children or a comfortable standard of living during your retirement years. Fifth, endowment plans do more than just help you save money to leave to your spouse and children. They can also be used to find a medium to long term such as home improvement, higher education or even a vacation from work. Now that you understand why you require it, how is some additional advice and some questions which always lingering in people's mind nowadays. First question, what kind of insurance should I purchase and how much is sufficient? Answer, protect your health and the health of your family first, and consider life insurance to protect and the household finance if you die. Finally, consider insurance that will provide you and your family with future savings. For the second question, every budget and need can be met by health, life and saving plans. It's critical to manage your finance well and set aside a portion of your income for a rainy day or unexpected health crisis. When deciding what suits you, the amount varies and it's the best to consult with a financial advisor to determine the best approach for your specific situation. There are several factors to consider such as your life stage, budget and goals for your lifetime. Second question, what if I am unable to pay my premium due to financial or medical issue? There are several options available to help you get through this difficult time. A temporary premium holiday or premium loan is one option. Another option is designed to provide you with a monthly income benefit if you are unable to work. Some education saving plans include a thoughtful supplementary benefit that's kicked in if the parents become ill or dies, waiving future premium on the child policy and ensuring that tuition fees are fully paid for in advance. Third question, my parents are financially supported by me. Is there a plan in place to take care of them if something happens to me? Yes, there are numerous insurance plans that allow you to name your parent as beneficiary of lump sum payout if something will happen to you. This payment exists in meeting your parents' financial obligation. You could also enroll them in insurance plan that cover hospitalization, surgery, physiotherapy, and even traditional Chinese medicine treatment in the event of disability. This provides monthly benefit of lump sum payout. Question, why should I invest my extra money into insurance instead of high interest saving account or college fund for my children? Insurance is multi-phase and cover a wide range of scenarios. Fixed deposit account with their high interest rate to provide specific security, but insurance saving plans have been specifically designed to provide guaranteed payout and predetermined educational milestone in your child life, so you don't have to worry about raising costs. And if something happens to you, you can rest assured that your family financial security is secure. Saving money in the bank is good to start, but if you want to make your money work harder for you and supplement your saving, insurance is the way to go because it provides a higher yield and better prepare for your rainy days. You need vary depending on your stage of life, and insurance provide option. Fourth question, when is the best time to begin considering insurance? The sooner you start, the better. The moment you save your first paycheck, you should begin saving for your health and long-term security. Getting coverage early will provide you with peace of mind at the lowest possible premium. Choose the level of coverage and premium that best meets your needs and budget, and you will be able to adjust it as your needs change over time.
Alright, at this session, do you know what is the image in the slide? Are you familiar with this? Sure, some of you are still not familiar with this graph. This is called financial planning pyramid, or mostly called this is a financial triangle. Do you mind? What if your financial is changed upside down? It shows not balanced, right? Yes, many people do not realize that insurance coverage is at the bottom of the financial pyramid and is followed by the saving.
In the end, financial planning is a methodical way to reach one goals in life. A financial plan helps you get where you want to go in life. It helps us manage our money and reach our goals by giving us more control over our income, expenses, and investment. Personal financial planning is a method for making the most of the money you already have through good money management. This helps you reach your financial goals and
everyone needs to have their own plan and goals in financial planning, but there are still many Malaysians who feel that having insurance coverage is not a priority in financial management due to a lack of awareness and limited financial management. This is a big problem for all Malaysians in this century. However, there are several ways for you to overcome problems in financial management. First is saving habit despite small amounts. Most Malaysians do not have enough savings. According to the Hazana Research Institute, only 11% of Malaysians have enough savings to face the economic downturn. To keep your finances stable, you need to be disciplined by saving a certain amount of money from your salary every month. For example, if you can save 100 a month, you need to do it consistently. Although the amount is small, it is important to start today so that you can see the benefits later. In this way, an emergency fund can also be built even if insurance coverage cannot be provided. In order to encourage this kind of attitude and practice, it is best that every parent emphasizes to their respective children to save from as early as 1 year to get a large return on saving when they are adults. 1 year to get a large return on saving when they are adults. The second is set financial goals. To have good financial management, we should first set financial goals. It is recommended to make a monthly budget and record each monthly cash flow and savings or investment plan. Prioritize more important things such as having self-insurance or paying for car insurance coverage when the term expires. Perhaps this way monthly spending is more organized and the provision of emergency money for protection is also available without need for financial burden every month. Many Malaysians want to have insurance coverage, but due to unmanaged financial management and tight budgets, they do not feel that this is important for themselves and their families. Even though those who already have protections also face inconsistent payment problems if financial goals and financial management cannot be resolved properly. The third is maximizing income tax returns. Among other financial management is maximizing income tax return. Income tax exemption is one way to help reduce daily financial stress. Generally, exemptions are given to those who support elderly, parents or school-going children. By planning your investment and filing out tax exemption forms correctly, you can maximize your returns, especially with the expansion of lifestyle tax exemption, which now include gym membership fees and monthly internet bills. Checking the protection plan according to the ability. To avoid waste or loss in managing finances, it is best for us as individuals to first check the protection plan offered by the insurance according to our ability to pay each month so that there are no leaks in financial management or insufficient problems with money. While in the face of car insurance due to floods, this study is an option for all drivers whether they want to take it or not. But if the area where the driver lives are at risk of flooding, shouldn't this be a priority for them to take this additional rider in their car insurance policy plan? This is because there are many more individuals who are still thinking about taking protections because they feel that buying life insurance is not a profitable purchase, but when they have had a new accident, they realize how important and how good it is to have this insurance coverage. The number 5 is financial securities. Most people think about having insurance coverage. It would be good if you realize that by compensating for the losses experienced in an emergency, having an insurance policy provides financial security for yourself and your family. With our protection, we are guaranteed in the event of an emergency without having to spend a lot of money. This can simultaneously help us plan financially and achieve goals in financial planning. So here we as individuals need to know for ourselves or choose for ourselves what type of plan and how to take it.